Hello everyone, welcome to another pre-market analysis. This is the Tuesday 1st of October 2024 and this will be for the micro mini NASDAQ index futures. So let's see how things are in line. Let's have a look at it now. So at the moment the New York time is around 9 o'clock in the morning. It's 10 past 9. So we got some high impact news coming at 10 a.m. So, so when the market starts at 9:30, we need to keep an eye about 10 o'clock news because it can cause volatility and it can impact our trades. So with that understanding, let's jump into the daily chart. So it's 8 past 9 in the morning, right? Okay, so looking at the daily chart, so this is a pre-market analysis and this is not licensed finance advice or this is not investment advice. This is only for education purposes. This is, we have to say that for compliant reasons. Okay, so looking at the daily chart, we can't see a clear bias like a daily bias. The reason is, as we have explained in the last couple of days, the price has reached this imbalance, the fair value gap, and it formed a swing high here, but today it's sitting here. So the price, well, we are expecting the price to go and clear this swing high over here to grab that buy side liquidity. We are expecting that. However, having said that, the price could even kind of come down, grab some liquidity over here. So overall we are not very clear. However, we are long term, like we are more towards having a bullish bias. The reason is like more a bullish bias because we can see this is the current daily candle. It's still forming, but if it makes a swing low here, right, like if it makes a swing low here, what that means is, if we look here, let me quickly show it. So even though it's currently still forming, if this is going to be a swing low for today, like hypothetically, then if this candle, if it's a swing low, then there's a chance that this candle which is currently forming might go and grab the liquidity above this. So like, and then even go further if this is swing low. So we have that in mind, right? So option one, like possibility, this is a possibility we are talking here, or if not, it's possible to go and clear the liquidity over here. Having said that, it could even go down. So we have to keep monitoring that. So we don't have a very clear daily bias, but we are more towards bullish. This I think and expecting or anticipating, but we had analyzed the price to go higher in the daily, right? So that's the daily bias, not yet clear yet. So looking at the hourly chart, we can see here it's a choppy price action over here where I move my mouse in this area. At the moment the price is here, so let me click here, yeah. But if I look in this area, it's a choppy price action. So we can see the price was coming down, it came down, but if we look here as a swing high, we can see over here this candle broke that swing high, so it formed a higher high, and then this push up broke that swing high, so it's forming higher highs. But before that it was forming higher lows from here to here, higher lows, then a higher high broken, like a shift to up, market structure shift. And overall, like when we look at it from this price leg up, we can see like a swing high form, then a higher high. Then what we can see here is we can see relatively equal lows being formed here if it's swing low, like swing low, and if this is a swing low. So we can see in this line we have drawn here, relatively equal loss, there is sell side liquidity residing. So if you can't understand why sell side liquidity is there, have a look at our other videos we are going to release in the very near future. So subscribe and click the bell icon, and so you'll be notified. So there is sell side liquidity. What that means is, now the price is here at the moment today. This is the 1 hour chart. So hypothetically, there's a chance where the price can come down and grab this sell side liquidity, and then after grabbing the sell side liquidity, then for the price to go up and let's say grab the buy side liquidity residing above here. So why hypothetically why do we look at that as is because, as I explained, the price from this point to here swing a swing high, a swing low, and a swing high, which is compared to this side's higher high, and then relatively equal lows being formed. Not only that, and the price currently unable to this swing low. Okay, so it's a higher low compared to this low. It's high. So this swing low was unable to push and break this swing high, because at the moment it's like having, at the moment from in this price area, it's like a uptrend. Okay, but it's in this area. So but this higher low over here compared to this was unable to break this higher high over here, swing high. So then when it happens like this, there in price action there is a chance where the price can come down and sweep some liquidity, sell side liquidity. Why? Because then if the smart money, if the algorithm bring the price down here, then the smart money can buy. How? Because there's sell side liquidity, meaning there's sell orders here. So smart money can grab all that sell orders, there's a chance, and then to have a strong push up like mentioned here. That strong push up, then to clear, if they buy here, then they need to sell to take profit. So to sell, they need buyers. So there's buy orders here, buy side liquidity. So then there's a chance, as I mentioned, the smart money to go here and take profits. Now this is hypothetically the situation we are explaining. But keep in mind, price can do whatever it needs to do. Okay, we at team Trade Oxygen, the team at Trade Oxygen, what we are trying to do is we are trying to make a probabilistic speculation, right, like a guess, but with probabilities, like we are going to find price actioning reasons, price actioning reasoning, right? So which is what we are explaining here. But again, this is not investment advice. This is for education purpose only. This is for compliance reasons. So now you understand our thinking in the pre-market. When I say pre-market, still the market has not started. It's starting at 9:30. It's 9:17 now. So this is the idea. So I will take, right, let me just okay, let's look what's next then. Okay, so this is the 15-minute chart. So this is that earlier price action we were explaining over here. Let me delete this for a second. Okay, so over here, if you look at 15 minutes, we can see, if I start from here, the price, when the price was here, when it came down, it grabbed the sell side liquidity here. So that means smart money, we can assume that smart money has bought here. So the price pushed up and pushed down and again push up. So it may, like this is the 15-minute chart. So the same thing I explained in the 1 hour is what I'm explaining here. So it made a higher high, swing high, and then it came down, price came down here in the London session today, and it formed relatively equal lows. So as I said earlier, there's sell side liquidity, right? And then it pushed the price up. However, like from here to here, when the price pushed up, it made higher highs, this point to this point, higher highs. But when this price pushed up from here, it was unable to make a higher high. It was unable to make a higher high. So it made a swing high here, but it's not a higher high compared to this. And now at the moment, the price is here. As you can see, by the time I'm talking now, the price is here. Now, so when this happened, uninformed traders, so there's two groups, smart money, which is the banks and large organizations, and then retail traders, like uninformed traders. So retail traders can think, okay, this is resistance, so they can see the price did not break that resistance, so they look it as a resistance, and then they think, okay, the price is coming down, which is what is happening now. So when they see price coming down, uninformed traders might think, okay, the price is going to go further down like this. However, now looking at the facts, well, yeah, of course, like, okay, so let me tell it this way. So looking at the facts, what we can see is the price is coming down now, and there's sell side liquidity here. So smart money bought here. So there is a chance where the price might come down here, and then there's sell entry. So then smart money can again buy here, as we mentioned in the 1 hour chart, and this green color arrow is showing that, the green color part. So then the chance of putting the price up, pushing the price up to grab the buy side liquidity here. So there's a chance where smart money can buy here at 9:30 today when the market starts. Still the price is not there. This is a pre-market, live pre-market analysis. So we are expecting, so in trading we are looking for scenario. So this pre-market analysis is, let's say, scenario 1 which could happen, which is we see some high probability with the price action what we see here. Okay, so in that case, then the price could move from here to here, and in that case, our trade entry, if the price come here and then if it shows the sign of like shifting towards up when the price come here, for that we have to go to low level charts. But we do that at 9:30 only if the price comes here. But also we have to keep in mind at 10 o'clock there's high impact news. So this is a hypothetical scenario 1 where then our entry will be somewhere here. It could come further down because there's a 15-minute fair value gap. Okay, so if it could like come anywhere down here, let's say from here to here, anywhere down here. Let's say there's a fair value gap, and then let's say to go up and clear. So in that case, you can see there's a fair value gap here. So if I just expand this, so again, if you are not sure what is a fair value gap, subscribe to the channel, click the bell icon. We'll release more educational videos of explaining what is a fair value gap with examples. So there's a fair value gap here based on ICT trading concept. So there's a chance, so it's a price imbalance. So there's a chance of price coming down and filling this imbalance and then making a market move, like shift upwards once at this point over here, like reverse from here or bounce from here and then to go up. So hypothetically we have to go into low level, but if I am to show a hypothetical entry, this could take place where so the stop loss and everything has to be calculated at the time this happens, but hypothetically we could look into an entry like this when the price reaches here. So this is a pre-market analysis, right, for education purposes. So in that, if that hypothetical scenario 1 happens, then as we said in the daily chart, this could be like a swing low where the price could push up, right? So This is a possible scenario. However, as I said, this is not investment advice, it's for education purposes. Now, however, if you ask, okay, this is pre-market, we are telling this before 9:30, will this happen? Well, we are absolutely not sure if this will happen, right? Then you might get confused thinking, well, why do we say that? Answer is, in trading, price can do whatever the price wants to do. The algorithm can do whatever it wants to do. For example, even though we explain it like this, the price might come, let's say, somewhere here. I'm giving example. The price might come like this, might show us signs of going up, right? And then all of a sudden price could go down and grab the sell side liquidity residing here. So in that case, if that happens, this will be a losing trade. So in trading, it can be a winning trade or losing trade. What we do as traders is to make a speculation with high probability. What do I mean by that? So what I mean is, we just don't take this trade, right? At 9:30, when the price comes here, where I move my mouse, we need to see if the price is going to bounce. So we need to see that footprint, right? So we'll teach you how to look into that. So if that footprint take place, for example, if the price comes here and bounce up with, let's say, displacement, and then if we see a fair value gap created, right, in that displacement with the order block, then it makes our chances high for us to take a long entry. So what we do as traders is, we need to make an educated guess, speculation, to see if this trade is going to play the way we described in this scenario. So if the points increase in our favor, we will take the trade, right? If not, if we don't see that footprint here, we will not take this trade. And the price might do whatever, price might go down or up. Sometimes we may not take the trade, but still the price might do what we said. So it all depends on the price action which is going to form here. And let's wait for a second. So it all depends on how the price action will form here. And also, sometimes the price action might form here with displacement towards upward, with the fair value gap, order block and everything. And we may take the trade, but all of a sudden the price might go down. So then it's a losing trade. So trading is not only about winning. Trading is if when you win, you gain, let's say, 1 to 2 or 1 to 3 risk to reward ratio. But when you lose, you cut down your losses, right? And trading is a long-term game, right? Meaning you take trades, and some days it can be losing trades, some days it can be winning trades. However, it's not gambling. This is educational, probabilistically backed trade entries. Okay, so this is a pre-market analysis for you to understand how we are looking at the market today. We'll see you again today in a live analysis and a post-market analysis. Until that, stay safe.